I'm Corbett Wall with DV Auction, here with your cattle market summary for the week ending June the 3rd, brought to you in part by the American Simmental Association. Check out today's Simmental and see what Sim Genetics can do for you. Go to simmental.org. This cattle market kind of reminds me of the Revenant, and I don't know how many of you saw that movie, but it was all about how you thought this guy was going to die from this bear attack, but somehow he keeps staying alive. And that's kind of what the cattle market's been doing. You'd think that the bearish pressure on this market is just going to make it completely fold, and I know we've been on a downer for quite a while, but I think we have reason to believe that we've got a lot further to go down. But it seems like out of nowhere, without a whole lot of help from anything, we keep getting some support from some place here or another. And I know we're fairly current in the feedlots right now. We've been killing a lot of cattle, and we've had a lot of good consumer demand here, and it's that time of year for that. But really this week we saw this market bounce back a lot better than what we really thought it would. And I think going into this coming week, we're going to be able to reap some of those benefits, especially in the feeder cattle market. But your futures market on live cattle, your August contract, ended the week at 117.80, which was down just a quarter from the week before, the end of the week before. Of course, we were closed on Monday due to Memorial Day. Your feeder cattle market in the August contract ended the week at 146.67, which was down just 3 cents from the previous week. And we've just kind of been treading sideways, and this sideways tread, we finally found some footing here a little bit, and I don't think it's long-term footing. If you've been watching me very long, you know that I think this fall is going to be significantly lower in all of our cash cattle sales, but we have found some short-term footing here. Your CME feeder cattle index came out on Friday from Thursday's sales and before at 147.21. Your real-time index from Cattle Market Central and Beef Market Central is a whole day ahead of that and ended the week at 148 even. And that's with some higher Friday sales, which the latest CME index doesn't have. I think when it comes out on Monday, we'll see some more higher, and it'll be real close to that 148. And that's what the real-time index does, is it's just a precursor for your CME cash feeder cattle index, and it just kind of trails it around like it's if it was pulling it with a hitch. So you need to keep your eye on that real-time index. New crop corn has been gaining a lot of ground here, and I don't know if you've been watching it. Of course, nearby has been too. But new crop corn's almost at 420. There was a lot of people that said if it crept up there above 415, that would be a real bearish signal. And so now it's at nearly 420 and actually trading at a premium to what nearby corn is. And that's not usually the case. Usually your summer corn that's in the bins, it's got a lot of storage on it, and there's not any new corn coming back around, is higher than what the new crop is when everybody starts harvesting. But and I'm not sure why that is. A lot of us thought that there would be a drought in the Midwest and in the Corn Belt following all the El Nino stuff, but that hasn't happened. It had a lot of good moisture. Planting on corn and beans both was ahead of schedule, and everything really going good for the crop, and it looks like we're going to have another bumper crop, and we planted close to a record number of acres again this year. But your fat cattle trade was your big higher thing for the week, and you know, I talked last time about it being either side of 125, which 125 was kind of on the high side of the previous week's trade. And then all of a sudden the feedlots just held them off, and maybe they should think about doing that a little more often. Nobody sold anything hardly at all. I mean, maybe just one or two here in an auction or something, or maybe one deal, but nothing significant enough to set the market until Friday. And the packers tipped their hand by coming out and raising their bids on Friday, showing that they needed some cattle. They've been killing a lot of cattle right along here, and making money since the beginning of the year. We can't always cuss the packer, because we've got to have them if we're going to raise cattle. We've got to have them somewhere down the line. And these packers have been making money almost every single day since the beginning of the year. and they want to keep making more, and the only way they can do that is have something to hang on those hooks. And they sold cattle $3 higher in the Southern Plains at 128, which was really a surprising trade and a real shot in the arm for the cattle market. Had a few in Kansas up to 129, that's even better. Your Northern Plains live sales, they're starting to get a premium again because the cattle aren't grading choice and better very much because every place is so current. They don't have as many days on them, they're not as heavy as what they'd been. And where last year we was running along where choice and select are about the same, and your heavy cattle, your cattle that had a lot of days on them and were really fat, we're bringing just about the same as the cattle that really weren't quite done. Well, not now. Your Northern Plains, where those cattle have more days on them, your quality grade is going to be a little bit better on those, and a larger percentage of those are going to grade choice. They're starting to bring a premium now to the rest of your fat cattle in your Southern Plains and places that don't feed them quite as long and don't have the more straight English cattle that tend to grade a little better on the quality side, not so much on the yield grade side. But Northern Plains live sales 130 to 132, that's $5.50 to $6 higher. Had a few up to 132.5 on the extreme high. Dress sales were $6 to $8 higher at 206. Colorado had some cattle from 131 to 132, and just really a surprisingly good and higher fat cattle trade there, and we said last time we talked that would be a bullish signal, and I think it definitely will be for everything. Your weights were down, just back down to a pound again, so it didn't show that we started putting more weights on cattle. Your actual slaughter come out late Thursday with 862 pounds on your average dress steer, which is good because it shows that that's staying down and going down more and more, and then it's under what a year ago was. Your cattle slaughter has been staying up there good. It was a little hard to gauge here through the holidays, the Memorial Day holiday, because we were kind of a week off from what we were last year, so it was hard to gauge, but going into this coming week we'll be able to see if we're still staying on track. So far, year to date, we're almost 2% more cattle slaughtered than last year, so we're cleaning those cattle up pretty good. Your box beef cutout values were lower this past week. We knew they would be, but they weren't terrible lower. It was mostly your select. Everybody's really wanting the choice and the better quality and most of your middle meats on your higher dollar cuts there. But on the weekly average, your choice cutout value was $220.40, which was down just 80 cents. Selects were $200.58, which was down $4.20. But you see that spread now is at $21.82. And the reason that is because these feedlots are keeping cattle cleaned up. Your weights are getting lower. The cattle don't have as many days on them. They were heavier going in. And a lot of these guys are killing cattle back with, less than 120 days on them, which is what we used to do. But the last several years, we've been feeding cattle more like 150 days and then really wanting to get some bark on them and get them up in the higher quality grade. But now that we've got a big push for the higher dollar cuts and they want that choice product, and there's a lot more select on the market because the cattle aren't as far done, now we're seeing that spread out there quite a bit, and almost $22 on the hanging meat there for your box beef cutout values. Cash feeder cattle gained a lot of ground this week. It was really hard to say that we had a great test because most of your big high volume sales are on a Monday, and of course all of them were closed except for a special here and there. But your main markets that everybody gauges were closed, and the ones that the corporates stick to. The ones that were sharply higher were up in the Midwest there, and a lot of those were heavily influenced by farmer feeders because they're mostly getting cleaned up on planting their crops and they're ready for a summer project. But $6 to $8 higher on your big midweek sales, and it's hard to say that your cash feeder cattle market is really that much higher, and most of us have to see Oklahoma City and Joplin and some places like that do it before we'll realize that. Oklahoma City and Joplin and them will be sharply higher, at least $5 higher this coming Monday here. So be ready for that. But we'll see how that goes along through the week. But this higher fat cattle market, and the longer we can keep this thing higher, the better it is for the whole beef complex there. So everything's looking good. You look at a quote there on Cattle Market Central late in the week on Friday at 10 o'clock in the morning. A bluegrass stockyard market in Richmond, Kentucky. Richmond, Kentucky sold a load of steers weighing 867 for $1.46. That's awfully close to 900 pounds and awfully close to $1.50. And so that is dollars and dollars better than where we've been selling them the last several weeks. But from my DV Auction home office here in Canyon, Texas, we'll talk to you next week.